Hey traders, I thought I'd do a quick video for the recap today. And first things first, let me remind you that Sunday morning we will have our usual charting session. In this email or in this post with the video, I will have a link to the spreadsheet, actually the form where you can submit the tickers you want us to review. Again, this is where I do the homework for you. Sunday 2-hour charting session. You can attend, please. If not, I will record it. Now, how did today end? The Bears lost an opportunity. We had pretty bad news today. Not so much news. I'll speak about that in a little bit. But the day was perfect. If you were an active trader today, and if you had the chance to be in the live room with us, it was a fantastic day. It was a lot of fun, pretty exciting. It's like a chess game, but if you know charts like we do, you rocked, and we did. We entered long here, and look what happened. A lot of people entered longs here. We expected this to happen late to 419, and it happened. So what am I saying? I'm saying today was messy, and people lost a lot of money, but not us, because we were not listening to news. So don't listen to the news. That's what I'm saying. Okay, there were opportunities played out perfectly, like this trade here in the morning, and even late at night. So news aside, we still were able to produce great wins today. So ignore the news to the most degree that you can. It's human nature, but try it. So let me get down to what happened today and what to look for Monday. So I switched to the SPX, which is the S&P daily chart, to show that the day was slightly red. Okay, not a big deal. It could have been a lot worse after two massive candles. Okay, so why could it have been a lot worse? Because those massive candles came from the impression that, hey, those politicians have a deal in place. Powell didn't say anything bad today. He said pretty much what he said before. He pretty much said he's done raising, but he's still concerned about inflation. So Yellen raised the flag about the banks one more time, but those two comments are secondary to the fact that now we have the debt ceiling problem to deal with. I still think they'll strike a deal. Why? Because if they don't, it's catastrophic to the country and the world. I'm not exaggerating. Let's not go there, because my assumption is that these idiots in the end will get it done. Hopefully not late. Hopefully in time so that the US doesn't default. All right, so technicals. The Bears are up against the wall. If we had closed at 4,200 or higher, 4,205 or higher, then we would have pretty much closed, not pretty much, we would have actually closed higher than this guy right there. And we're so close. So this is the hurdle. This is kind of a last minute hurdle. And then this. If we have higher highs next week, if we just have one green day, Monday or Tuesday, and then a red day, and then a green day, we're gone. 4,300, 4,350, 4,500. You've heard me say, I've said weeks ago, I think it's 4,500 before 3,500 unless a new shoe to drop. So unless the debt ceiling, which is a giant shoe that would drop if they drop it. My thesis, if they won't, they won't. So the Bears, those who expect a disaster, need a miracle headline. They cannot delay it anymore. It needs to happen. So the weekend, I don't know. So what did we do with trading? I kept a lot of my longs. I got stopped out for 50% profit on a short-term call in Apple. And I still did. I closed some of the winners that I shared with you, which is basically selling puts and put spreads in stocks that were falling into support. I took a couple of new trades today based on other people's idea. Deere was one of them. I shared that. The weekly candle is extremely red. Green. So on a weekly basis, this is the highest close since last August. This is a weekly candle, and the close was up here and here. So August, we had higher closes, and that's it. So that's a pretty good accomplishment on the S&P. The Qs are, forget about it. The tech is way up there. That's they broke out of February and they broke out of August. So the IWM is still the problem, and the IWM is the small caps. And today was disappointing. It was down the most, although we closed off the lows. It's down the most today. I still need it above 180. I need it above 180 to believe it that it can go here. Until then, I don't think the SPY can break out. So Monday, Tuesday, I need 2 big days in the IWM. So the odds of a bad headline over the weekend is pretty high. Not high enough for me to buy puts and hope, but it's pretty high for me to scalp some longs like Apple. It was a 60% win, 50 to 60 depends on which one you did. So I took it. It was a short-term bet. All right, that's it, folks. Nothing has changed. We don't have new information. The BS news about having a deal the other day was just fake news, like I told you it would be. And they still haven't even sat down to talk. Today, they weren't even willing to sit down to talk, so they walked away from the talks. I'm not a political expert, so I don't know if they have talks scheduled for the weekend. They probably do. I don't know. So we're slaves to the headlines for the short term. My thesis is that they will get it done eventually. All right. Have yourselves a good weekend, and signing out. Oh, subscribe to this channel where you're seeing this video, and put the bell on, because I'm going to go live to do some charting before a couple of days a week for us, the members, before the market opens. This way you'll get notified. It's mostly Mondays and Wednesdays, and a bonus charting session before the market opens twice a week. So that's a good resource for you. You're not obligated to be there, and they will be recorded, but you have the opportunity to ask for tickers yourselves.